light. The day is perfect. It has broken perfectly because it knows that the conversation will go really well. Good morning and welcome. Thank you for joining us. And for those of you who are still trickling in, for those of you who had to wake up someone and tell them you forgot to log in, the time is now. Please do those, call them in. The conversation is around dollar investment. But now remove the word dollar and keep the word investment. This is around growing your money. You suffer in making it. Surely the money should start doing some hard work now, and that's why conversations like this exist. I'm Flavia Tumsime Kabura, and I'll hold fort for the conversation in the next a few minutes until all the way to an hour. If you have any comments, any itching question, because you can't be too sure, we might listen to your mind. Have it jotted down so that, if you don't hear it at some point halfway the mark, you'll be able to put it in the comments. We'll be able to call for questions or comments, and you'll put it in there. And maybe if time allows, we want to also hear your voice later on. We'll be able to open the mics and, hear you as you ask your question. We have everyone from everywhere. We have people in the diaspora who've logged on because they need to know what their money can do for them. And the reason this conversation is happening with the pace setters, the trend setters, the people in the industry who make sure they start the conversation, and maintain the conversation is Britam. Britam is the earner. Now, it takes very many facets, but this one particularly is talking to the mid and to high risk investors, the ones who say, I have the money, I just don't know what to do with it. The ones who believe, I'm not that strong at business, I'm not that strong at real estate, what am I supposed to do with my money? They've got that figured out. Or you have all of these facets going on, which is why part of our panelists have, people who know entrepreneurs in and out, and they're here to tell you why this makes sense for you. And speaking of panelists, this conversation, for me, I'm really just driving. The people who are having the conversation are going to be in the seats. So it will be a good time to introduce you to who I have today. I said Britam, so it makes sense to start off with the Britam Assets Managers. Ronald, who's right next to me, you need to be very kind to him. Ronald has been doing these many things of, investing your money, making sure he develops strategies so that your money goes in the right places. But talking to you here, maybe not so much. Ronald, welcome. You're the asset managers, Britam Investment Asset Managers, and you're going to tell me, because your role is really to develop where our money goes. You're going to have to explain your role in the simplest terms to the simplest person who's on the call today. Go ahead.
Thank you, Flavia.
Yeah.
My role is to help your money grow, to work with you to meet your financial goals.
Yes.
And this is something I've been doing for the last 20 years. And I'm excited to be on this panel today.
20 years means we should trust you.
If you say so.
Yes, you've seen the good and the bad over the years. And I think maybe you'll be able to speak to us later on about the since you've dealt with people, the customer, and knowing their investment goals, what that has looked like over the years. Because 20 years, that has changed. It keeps growing and changing. And still with Britam, I have the investment manager who actually for you, you've track record of managing up to, when they say someone is used to handling business of this magnitude, you start to trust them a lot. I think it's $300 million in assets. Vernon, that's not your money, that's our money. Yeah. Yeah, Vernon Chiguru, good morning and welcome to this. What would you tell us about what you do?
Yes, so I'm the investment manager at Britam Asset Managers. Position I've held for about 3 years now, but I've been with the organization for about 7.
Yes.
More or less since inception.
Yeah.
And my job is to now lead teams in the investment part of your money. So after that money comes in, my job is to make sure that I add value to it. So any kind of structuring, the actual investments, the assets, any research, analysis, yes, that falls under my department.
Yeah, because once I give you the money, I don't want to know the in-between. I want to know the interest that comes to me after a certain period.
Correct.
So you're the one who takes that bulk of the work in the middle after I give you the money and until I get my interest. Wonderful, understood. And this doesn't happen, and of course if you've been dealing with Britam for a long time like some of us have, you know that in their business they're regulated. Somebody has to hover over them to see that they're doing the right job because it's money involved. When money involved, everybody is sensitive. So I have Dennis Chizito, who's the Director of Market Supervision at the Capital Markets Authority. You've got a decade plus in experience in regulation and supervision. Those are very, those are words that Vernon and Ronald may not like, but we like, as the clients, we like when you can supervise the person handing our money. And what can you tell us, or the audience is listening, about what you do?
Thank you, Flavia. My name is Dennis Kizito, and as Flavia has said, I work at the Director of Market Supervision at the Capital Markets Authority. My job really, in a summary, is to protect the interests of the Ugandan investors within the capital markets of Uganda. And that's why I'm here.
Yeah, and that's why he's in the middle. so that any blows don't land anywhere else. We have two other experts, because you might be wondering, what about the other faces? But they'll be joining us online. And so, yeah, since the rest of you are online as well, this made it much easier to have. So I'm going to start off with Alex. I know you can hear us and we can see you, if I'm not mistaken. Alex, you're a finance and investment analyst, over 8 years of experience in finance and investment. Alex, are you the one representing us, or Montwawans, the individuals in this conversation?
I hope so. I hope so. Thank you so much, Previ, and thank you so much, everyone who has tuned in. This is going to be an amazing conversation, especially for those who want to talk about their investments and how they can use Britam to make sure it works best for them and how they can grow their assets.
Right. That's Alex. And the other final person we have on the call is also online. And if you are a business owner, you've been thinking to do business, you're anyway in the SMEs category, this is the person who represents your voice, has dealt with what you do for a long time and your needs for a very long time. He's an international private sector development consultant. He's consulted for various organizations, including the UNDP, GGI, ILO, the Kingdom of Netherlands, among very many others. Where I met him and how I know him part of this conversation is that he volunteers as the Executive Director of the Federation of Small and Medium Enterprises of Uganda, and many other things that he does. John Walugembe, good morning. Thank you so much for being part of this conversation.
Good morning, Flavia, and it's a pleasure to join you to discuss very important issues that impact on the future of businesses and individuals, both in Uganda and without.
Yes, thank you. So I wanted to start this conversation because I was where do I start? Do we just dive in? Do we just explain to you what it is and then tell you here? But it would be easier if we explain to why you even need to get into this level of investment. I look at myself as a client of Britam and I see how I've grown through the different facets. Now as a mom of 3, now even my career has changed, my earning ability has changed, my desires and goals have changed. Even what I need to invest in absolutely has to change. I need to live the level I've been investing in to get to the next level. And there are people like me who, like a typical Ugandan, and John will speak into that, you're all business owners. The business, you might see it once a month. You know, you might be in it while you're doing your 9 to 5. Others have dedicated their time to it. But if you think about it, all of us in Uganda are somewhat in business. For me, my business is me. I am the service provider, and so I offer the business. So I need to learn how to now scale that up to be able to make money in the future. And I thought, John, I'd start off with you to explain to the business owners, to the people in the SME category, why they even need to listen to the word investment. Because someone might argue, but I'm already investing. I'm already a business owner. I've already put my money somewhere, and it's making money. Why do I need to take it a notch higher? Why do I even need to be part of this conversation? John, shed some light for us.
Okay, so business owners need to know that business in Uganda is rather volatile. You might be making it today, and tomorrow they tell you that Chinatown has come, and suddenly your business, the business fundamentals have changed. Yeah. All your clients are lining up and things like that. So you need to know that it's very important that you diversify, both for your business and for yourself. We see many entrepreneurs who age and cannot survive in retirement because they've not made sufficient plans for themselves. The other thing, so there's the issue of diversification and hedging against risk, but also you can look at it as a way to accumulate capital to expand your business. So you can use this route to accumulate capital to expand your business, or it may be a way for you to retreat from a business and to launch into another. Many people do businesses that are not profitable, but they feel they have to keep going because they don't have options. And I think this gives you a certain level of options. Yes. It's also very important for business in terms of your financial health. You can't be a business and you're just like an individual, because when you're talking about businesses, we also have to think about ourselves. Behind every business, there is an individual. So what's the financial health of you, the entrepreneur, and what's the financial health of that business? what if tomorrow you have a challenge and you need large sums of money? Won't you have to borrow at exorbitant interest rates? That's why you see a lot of businesses are borrowing from money lenders and staking their houses that they've worked for years and things like that. And then finally, some people are engaged in international trade, and therefore your business involves a lot of changing of currencies and things like that. So this can be a way to hedge against such volatility in terms of exchange rates and things of that nature. So, and also some people are working abroad. You're out of the country. You're out of the country and you're earning in dollars. If you come and change your money and invest in shillings, it means that every time for some reason the shilling either depreciates or whatever, it basically hits you, you're making losses. So if you have a dollar-denominated investment, it kind of shields you from such. In a nutshell, I would say those would be the advantages of investing generally, but more specifically, investing in dollar-denominated kinds of investments. But just as the takeaway is that you must make sure that you plan for the future. You must make sure that you diversify your income sources. You must make sure that you hedge against future risk. And you must make sure that you're financially healthy as the entrepreneur, as well as the business.
Okay, you make very valid points, actually. I think you've hit it on the nail, that competition question of you think you're okay, you're thriving, now even if you're the market will come out of nowhere and it will come swinging, and you want to be able to be prepared. But also that scaling question, you want to scale up your business. Why do you have to look for funding elsewhere? But if your money has been, your profit has been going aside and growing, that helps you. I don't know if, Ronald, you can paint that picture of, we want to know, because somebody might be arguing, but I'll give Britta money, my shillings, and you're already growing them anyway. Why do I need to now tweak it to dollars? But maybe you're saying because if you move it to the dollar currency, you're giving yourself sort of like an added advantage. So if you can give us an insight on the performance of dollar investments, maybe that can help us see that, okay, it makes a lot of sense why I'll take this advantage over the other.
Thank you, Flavia.
Yeah.
So while we've seen a lot of stability in terms of performance of the shilling versus the dollar from 2016, prior to that we've seen episodes of depreciation where our own money has lost value compared to the dollar. And that means that if you're somebody who is importing goods, you are at risk because then you need more money to import, and that puts your business at risk. You never know what's the impact on your operating expenses, and that keeps going higher depending on the depreciation of the currency. So then you need to prepare yourself in the event you have obligations in dollars. It's important to set aside savings in dollars to hedge that risk. On the other hand, if you're earning in dollars, then it also makes sense to diversify. Let some of that money continue to grow in dollars, and that's what Britam is doing, because they're saying, set this money aside, we'll give you a competitive rate. We have a track record of 5.6% since we started testing the product from January up until now. And I mean, if you compare to what you would earn if you let that money sit in the various commercial banks in the country, you're somewhere between 1 to 3%, and we are saying you can earn up to 5.6% net of taxes. The product doesn't have taxes. It puts you at an advantage. When you have your money seated on a current account, on a cold deposit in a bank somewhere, you have a 15% charge in terms of taxes. So that's the value proposition that we are bringing as Britam for businesses out there. I think about hedging against these uncertainties, given the fluctuations around the currency, and then earn competitively to let your capital grow, which is also good for business and allows you to expand and be able to take care of various business expenses. Yeah,
I wanted to get to Dennis because a lot of people don't really put two and two together when it comes to regulation, because all they remember, I bring money, I give it to them, they've explained how they'll invest it, great, give me my percentage. But then it's a risk There's a risk involved in putting your money aside, and somebody has got to manage who manages my money. Maybe you can explain how that works and what contingencies are, because now we're dealing with a foreign currency. You know, what goes through that? Yeah.
Okay, thanks for the question. When it comes, I'll begin off by explaining the money issues when one person gets in relationship with another concerning the management of his or her money.
Yes.
Usually the risk in there is a trust issue, which introduces what we call the fiduciary risk. As in, you are not sure whether the other party you've entrusted your money will be able to keep the money, and that worst case scenario, give you the money as you give it to, gave it to him or her. But moving on to now the investment in dollar and dollar assets. In there, as the former speakers have hinted about hedging, for me, from the investor protection perspective, I look at the worst case scenario. And the worst case scenario for managing currencies is what we call devaluation. I know for Uganda it was last mentioned in 1986, and I think now most people have forgotten about it, but since it happened, it can happen again. Yes. Risk is risk, as you know. So, and one way of looking at how to manage the unexpected happening is you hedging by diversifying some of your investments into dollars. Ensure that once the worst comes to the worst, at least you have something.
And he mentioned the word devaluation. I'm trying to cater for everyone on the call who some might say, oh, the English way, it loses value. But devaluation that you're talking about that's the shilling devaluated or the dollar?
It's the shilling, because you have your money in UJEX.
Yes.
That is the functional currency you are investing in. But it can be affected by monetary policy decisions.
Yeah, something out of our control.
And cause it to really break down in money.
Absolutely.
Yeah.
I want to get to Alex. I know you're on the call and you've been listening to all of this, but now for you, I mean, there's that excitement people get, especially as Ugandans, where you hear the word dollar and you log off for everything else, and you say that this is a deal, kangende. But we need to, because the reason for this webinar is that Britam never really does anything without giving you information. You know, you have to be an informed client, otherwise you'll be a problem. You'll be a liability. You need to know why. And I need you to speak into maybe the trends you've seen on investing and why dollar shouldn't just be an excitement, but actually makes sense for anyone investing, whether individual or business.
Thank you so much, Flavia, for that, and to John and Dennis. But I think let's start from where you started from, that as Ugandans, we are talking about something called desires and goals for every single one of us. Right now, one thing we can all agree with, that in Uganda, there is one thing that is growing, the middle income class, what we call people who are starting to have real money. And as people start to increase in that class, their desires, their goals, their aspirations start to change every single now and then. Recently, we're talking about that there are more Ugandans who go to visit Dubai than those who go to visit Queen Elizabeth National Park. And you know, if that's happening, it's a representative of a growing desire of the middle class society, like Flavia and people like me and you, or John, and so many other people. So in those people, the first instances they are thinking about is, when I go to Dubai, I'm going to spend in dollars.
Yes.
I'm not going to spend in UGX. I might as well match my potential expenses to what might be my potential investments. That if I know in 1 year's time I'm going to travel to Dubai, or I'm going to travel to UK, whether it's for tourism or whether for whatever other reasons, what we are continuing to see, that middle class goals and aspirations, then you have to literally want to invest in such a way that when the time comes, you do not need to incur any FX losses at that point in time, because that kind of is what might be at this point should fuel the investments in the dollar accounts. That trend of the expenses in dollars that is increasing every single now and then should be a precursor. The second alternative is we are increasingly starting to see global trade, and I know John talked about it. Global trade is even for non-business people who shop on Amazon, people who shop on things like there is an increasing desire for people to just go online on a website, whether it's AliExpress, whether it's whichever way, and they buy things that come in Uganda. A person who does that trend makes you spend in US dollars. That has almost made many people to be in position to open up even dollar accounts as a savings account. That means at that position you are best off to literally to start investing in the US dollar accounts, investment accounts, that at any time when you want to spend your money, at any one time when you want to spend to buy whatever you want to buy, that automatically you just have to go to Britam, do your withdraw for some US dollars, spend it. You do not lose any value whatsoever in terms of FX, and at that position, whatever remains on the US dollar, it's earning a good return. The other thing which we are seeing in terms of trend, people are becoming more and more aware in terms of what's happening globally. Right now, when we sit and talk on many people who are on calls, they know what's happening in Kenya, they know what's happening in Ghana, they know what's happening in Egypt, in Nigeria, where they have seen the local currency depreciating by over 20%, 30% in Nigeria, over 100%. Now, this depreciation is where you literally say, a year ago I had 1 million, let me use Ugandan currency, 1 million UGX, and it was worth $250. Right now, you have the same 1 million UGX, but it's now worth just $200. So you have lost $50, and people are aware of such trends. And now that desire that the more people get aware and more informed, it starts to trickle down on the decisions they have to make. And the decisions, they start with even their investments. And I know John and Dennis talked about it. They start to want to think and say, how do I protect my investments? How do I make sure I do not lose this value that I'm thinking about? Because we work very hard to make this money. The last thing you want is to be whether the economic trends or the political trends to make you lose some value. So, and part of that is to say, if someone who was in Kenya in 2023 and they had their dollars, they made more money, they were one, protected from the FX, and two, they made more money by investing in a US dollar account, like the Britam dollar account, than they made when they had invested in the UGX or the Kenyan shilling. So someone who has that kind of information, they think long term. They have to assess the risk which Dennis has talked about and be in a position to say, if this is to happen back home, if this is to come back home, what is my protection against that risk? If the UGX, which has been stable, all respect to the people who are doing the decisions, but if this risk is to materialize and it is to come home, even if our UGX is to just lose by 20% in value, and no matter how much rate percentage I'm getting in my investments on the UGX or even in businesses, is it enough or is it eroding away because of this depreciation? And if I'm to invest in the US dollar, which is relatively very stable globally, and I'm getting a 5.6%, I'm getting a 6% return annually, where am I best served? And that is where people need to start appreciating. And that's the trend of that information. The more people have the information that's happening globally, the more it's guiding them and fueling them on the decisions they have to make. And one final point, Flavia, is on the information position also. People are starting to understand that the earning is not just on the profits alone. Sometimes earning is also the protection against losses. And when people are starting, for those of you who have done business, and I know John is the business guru here, when they talk about that, sometimes reducing your costs is as much important as increasing your revenue. And I know even Mr. Kagolo talked about it, that reducing your costs, and in this case we're talking about FX costs, which is the FX losses, that if at any one point you know you're going to spend money in the US dollar, the assumption is you want to reduce the losses you are going to incur when you buy the US dollars, which is an expense, whether it's for the business, for an individual. And how do you do that? Make sure you have your dollars ready. Make sure you're invested in the dollars. Now, when you see the 5.6, the 6.5% return that the Britam over the different months they have been operating the dollar account, they have been offering annualized different months, it's just not that. You have also to consider the FX impact of that. And most times when we always consider that and even compare it with the UGX, you end up seeing a 10-11% growth. Now, on the dollar, you're going to just say direct 5.6%. But when you consider the FX gains that you're going to make over time or over a particular period of time, then all of a sudden you are entering a 11, a 12%. And that, when people have that information, it starts to create a drive that requires them to start investing in the dollar accounts and the dollar products as compared to only investing in the local currency products. Back to you, Flavia.
Fantastic way to break that down. And you've spoken about so many things that have really gotten really show us where our investments should go. I at some point, because we need to think long term, yes. And I know, Dennis, you're talking about you think and optimize for the worst case scenario. What's the worst that could happen in the money system? And I was thinking that for someone who's gone into tech, they mentioned the word Bitcoin and I shiver. You know, the same way people shiver when they hear artificial intelligence, I shiver at Bitcoin, because whether I like it or not, like tech, the industry I'm going into has shown me, when they start talking about things, they're 10 years in, we're 10 years late. So whether we like it or not, some things will happen. So when the money system changes, I want to know if I've locked for 20 years, for the next 19 years, 18 years, what happens? But we'll come back to that as you ponder on that. Vernon, for somebody who is watching this and they make money through different ways. You've got people who are content creators, and because I mean that's a new job market now, where people just a couple of gigs in and they can make the money, you know, and in different currencies, because you've got a client from I don't know where who's paying you in whatever currency, and they're thinking, who is this for? This conversation, who is this for? The person who wants short-term, mid, long-term. Let's first give that clarity, but also in terms of time value of money. Am I better placed to earn that consistent earning in short-term, mid-term, or where's the value? I know you're going to tell me there's value everywhere, but break it down a little bit.
No problem, yes. So when we were developing this product, or whenever we're going into investments, the one thing that we have to do is profile our clients, because as much as we want you to invest with us in Britam, the most important thing is, are we meeting your needs or achieving your goals? So the only way we can know that is by profiling you, and this is how you know if this product works for you. So at the beginning of the process, we normally ask you a lot of questions, and Flavia has touched on some of the issues that we normally find key, which is how long do you want to invest for? What are your goals? Are you saving up for something? Is this an emergency fund? And all of that is done at the beginning of the process when we profile you. So particularly for a dollar fund, there are three particular individuals who would fit into these categories. So if you have US dollar incomes, for example, there are corporations, like you had said, they're individuals who are paid in dollars and they find it better to keep that money in dollars. Then there are individuals that have US dollar obligations. So let's say you're an exporter and you need dollars and you need to be able to access dollars to get access to your goods, or any other obligations that could include school fees. We have a lot of kids these days that are studying outside of Uganda, and a lot of those fees are paid in dollars. So you have these obligations that keep coming up. Flights as well. A lot of things that we pay for now as Ugandans are in dollars. So if you have those dollar obligations, this would also fit for you. And lastly, we just have individuals that want to diversify and have a US dollar investment. So this is not confined to just people who earn and need it, but also for people who want to diversify their portfolios into the dollar. So that's how we profile you, especially at the beginning, and then we're able to give you advice. So on top of the fact that we are fund managers, we run a fund which will earn you money, we are also financial advisors. So if you have a goal that you're trying to achieve, we're able to reverse engineer that goal, let you know what it is you need now in terms of the dollars and how we can get there together. If you're planning for a trip, if you're planning for a wedding, if you're planning to build a house, to grow a family, there's so many reasons that people get into the game to have investments. And I think what has really come out quite significantly most recently after this period that we've come in of COVID is there's a lot of uncertainty. So an emergency fund is also quite important. So if you want to save for a rainy day, this is also a product that's for you. But as you had asked, yes, so these US dollar products are for anyone. They can cut across and they are accessible to everyone. And I'm hoping that we'll be able to make that more clear during this talk.
The shortest time you can lock your money is?
So currently, the product that we're running as Britam, you can lock in your money for 3 months, 6 months, and 12 months. So it's really dealing with the low to medium time in terms of horizon investors. Normally dollar investments are long-term. So you get into property, you buy an investment in dollars, an apartment, a house, and that's a tangible asset that you have to then hold on to. It's long-term.
Absolutely.
But with the product that we offer, with our money markets, but also with our unit trusts, they are mainly for short-term individuals. So individuals that want to diversify from high-risk, high long-term return investments to short-term manageable investments that you can also be flexible around.
So it's 361.
12 months, yes.
12 months, but I can do beyond 12 months,
yes,
is what you're saying.
Yes, we have invested
this is an option you're giving because of, you know your clients, you know their needs and desires. But even for those who would like to take advantage and lock it in longer, you do. There's a question, Ronald, on interest rates, taxes, and all of that around the investments. But I want to go back to Dennis because I threw him that question of now the ones who are saying it's okay. By the time my 1-year-old is 20, it's okay, this is what we'll pay for Eton. I know the school fees might bite, so let me put it away. And they don't think about it, but now they're on this call and they've realized, wait, something might happen in the money system and, this will not be useful. A lot could happen. When the worst case scenario happens, what are you doing? Just paint for them that picture on what you do even now and even then to mitigate that risk.
Okay, thank you so much for that question. I'll first tackle the question I think you kept with me regarding the Bitcoins. Yes. Yeah, what's happening currently, we do have what we call the Capital Markets Act. And in that act, there is a definition of the word securities. Now, capital markets deal with securities. Now, under that act, CMA is mandated to designate assets as securities. So what we do in the background, we are not sleeping. We are doing a lot of research and a lot of study of these new innovations that are happening in the market, such that when we get to understand them better and we think they are good for the Ugandan market, we can gazette them as securities. And that's once we onboard them, then we can do the approvals and the monitoring of market conduct thereafter. Then getting back to the last question you asked me, what happens in the worst case scenario? What we do as a part of enforcing the CMA Act is really to continue calibrating it to ensure that it meets the emerging risks in the capital markets. But when the worst comes to the worst, we've been here for 20 years and we haven't seen the worst coming to the worst, but that does not take us off the focus of mitigating once the worst comes to the worst. So what happens is that we have, for investments of this nature, we have inbuilt measures within the legal framework that ensure that if the worst comes to the worst, at least the investor should not lose the amount invested. And how do we do that? These are funds that are being managed by fund managers, and the fund manager is different from the fund. I want everyone to note that.
It's different from
the fund, and that's why we have custodians. Once you put in your money, Vernon does not keep your money. Luna does not keep your money. This money is invested with a custodian, which is a financial institution, which has got adequate capital adequacy requirements for it to be able to hold these monies. So what happens once the manager, whom you are dealing with gets into trouble, maybe cannot sustain operations, what we do within the CMA framework is to move the fund to another manager who can manage. So what happens is that, maybe to conclude, my response is that we don't expect an investor to lose a shilling invested. And how do we ensure this? We continue to monitor how the funds are managed, and then that moment we see that the manager is not operating.
Capability.
Yeah,
right.
is not operating well, then we can give the funds to another person to manage.
Right. So, Ronald, I know we're coming back to that question. Someone wants those detail interest rates. What am I getting for? Break it down. People like details. But John, you're on the call. I wanted to, after Ronald's answer, come to you for. I like the whole short, because 3 months, 6 months, 12 months. You don't want an SME to get excited and to really not take the best advantage they can of this investment plan, because getting too excited and getting the money out when you could have waited. So you're going to be able to tell us for SMEs and even maybe individuals, what's the best way to take advantage of it? It's a great product, but even great products, if they're not handled with advantage of, well, we can miss that. So I'll come back to that. But Ronald, you first.
Thank you, Claudia. So in terms of interest rates, the product is structured as a dollar-denominated unit trust. Of course, the first advantage is there is no withholding tax, so you're earning your returns without taxes. And then secondly, you're earning your income on a daily basis. So the beauty about that, you're then benefiting from the compounding effect of those returns, because every day you're tracking how much you're making. And what Britam has done is to introduce the lock-in features for 3, 6, and 12 months. And that allows us to be able to enhance on the return, because your money is locked in, so you expect something higher than the other unit trusts where you're earning daily, but then you can come in and out at any point in time.
Yes,
so
I can withdraw it before the 6 months.
Yeah.
But if I lock my $5,000, $10,000 for 6 months, I mean, I'm guaranteeing that I will be earning.
So 6 months. So you deserve a compensation, a premium for locking in, and that's why we're able to say when you take the kind of interest rate you're talking about today, it's slightly higher than what you'd find on the market. A 5.6% net of taxes is a very competitive return, and that is only enabled because of the lock-in features.
Right.
But at the same time, you still have flexibility in terms of liquidity, because we are saying in the event that you need money, you can access this through your interest. You can decide to take out the interest earned for the period. So at the end of maybe 3 months, you can take out the interest. At the end of 1 month, you can decide to take out the total interest earned over that period. The other thing that you could do by staggering your investments across the 3 tenors of 3, 6, and 1 year, you're also able to build some kind of access to liquidity within your overall investment program. So, for example, you're paying school fees after 3 months. You place some money to mature
for that period.
And then if you're going to travel to Dubai at the end of the year, then you can also have some money coming at the end of Dubai. So it also allows for liquidity. At the same time, you have enhanced returns because you're locking in. You have the tax benefit and your stability. The dollar investments are generally stable. So we are interested in having a program which is preserving your capital. So capital preservation is very important.
Yes.
In addition to just earning the high income yield.
Yes, absolutely. I like that breakdown. Just like Vernon said, that I mean, it depends on what you need it for. Because some people, indeed, they'll tell you pay X amount of shillings plus these dollars for school. So those obligations are there. John, I know you're with us. I know you've had time to think on that. What's the best way for us to not get excited and miss the mark on what should we do? Because I don't want to get excited and lock it for 6 months when I really should have waited for the 1 year. And that's where
No, I think first of all, before you take on this investment, you must first of all indicate what I would call your risk tolerance. This is a low risk kind of investment, just like the regulator has mentioned. They have mechanisms to ensure that your money is preserved. They also have mechanisms to ensure. The law also protects the investment from tax, which is good. So if you are a low-risk investor, for instance, You used to be a trader, but you're getting old. This is a very good manage your risk going forward, because we need to appreciate that the investment decisions of a 20-year-old or a 30-year-old are not the investment decision of a 40 or 50 or 60-year-old. As we grow older, we have less energy and we want more consistent payments. And I think something like this would be very good. The other issue is that as you invest, you should also keep an eye on what I would call economic and political kind of developments that are going on around you, because these have an impact. If you've invested in dollars and the Fed in the US raises interest rates, it can be advantageous, for you. So these are some of the things. Similarly, as a country, if they say, as a country, we have imposed sanctions on you, that might have an impact on on the volatility of our currency. You see, so all those things will inform you what kind of decision you must and should take. The other issue is the goals. What do you want to achieve? And I think that has been talked about by Ronald exhaustively. Your goals will determine the length of time. Because the challenge with Africans is that we want to do things at the last minute. Now school is starting on Monday. Then you see parents looking around for school fees. So why don't you plan beforehand? If you have a child who is maybe 5 years, at some point they'll go to university. You start saving slowly. Don't wait and then you start selling off property. You start doing all these things. So your goals will determine. So if you have a long-term goal like that question of a child, it means you go the long route. If you have short-term needs, maybe you're a trader who needs to have some foreign currency as you go out, then you can afford to kind of go short-term. But in all instances, my advice would be that you learn the system. I tell people, don't invest in things that you don't understand. You're the best investor. For us, when I'm in business school, they say the best investor is yourself. So learn, understand the system. Start maybe by going 3 months, you get your return. Go 6 months, start with a small amount, start increasing. Don't say, I'm going to sell all my family land and bring all my money to Britain. And then every morning you're at Britain's door, I need money for this, I need money for the other. So take it slow, pace yourself, so that you are able to understand how it works and you're able to be able to develop yourself. Again, I need to tell business owners that as you plan for your business, the risk, the volatility of businesses in Uganda is very high. Things can either work or they may not work. So you as an entrepreneur, you need to ensure that you have what I would call plan B, and that's what we call hedging or risk management and so risk mitigation and so on. So that for me is how each of us should really proceed. First, by looking at your risk tolerance levels, looking at what your objectives are, looking at the investment, the developments around you and so on, and then trying to ensure that, okay, as I grow older, what kind of investment should I take on? And I would strongly recommend this because it gives you consistent income with minimal effort.
Thank you, John. Alex, I know you're with us, you're listening. I want you to ponder, and I like how you break down things. If you could think about what am I supposed to track when it comes to dollar investments? Because I'm looking at the comments where people are saying, but there's an election coming up. But so and so, this is happening. And, John was talking about sanctions. And you start to worry because now you're thinking with the people where the dollar comes from. You're starting to think, should I be worried about? I also worry about that, and I know it should be Vernon's problem because he's the one worried about where my money is going to grow. But think about the things we should be tracking as individuals, Alex, and also as businesses. But Vernon, a couple of questions. We're at the 45-minute mark, so I'm optimizing for any questions and comments as well. I don't want to wrap without you getting your actual, the thing you really wanted to talk about. I know someone asked whether the money is insured, and that question apparently was for Dennis. Was it not implied that the money is insured already, or should we still go ahead and answer that person?
I think that's a question for
yeah. I think they got excited and sent it to Dennis. But also there was a question on, you said you can access your interest at any time. People get excited. You need to be. I don't want to give you my money like Jonah said today, and then knock on your door the next day saying, "Katikale mompe yoko 2% of the money." So I think we need to be open about what that means. When we say you can get it any time, what's the actually any time, the maturity time frame is, and all of that for you to be able to take your money out. And as I've said, I think that you need to know your risk appetite. I was so convinced that this was maybe medium to high, but it's not. You were saying it's for those who need the money out of the fund as quickly as possible.
So there are two factors here.
Yes. Yes.
So for the tenor, we're looking at short term.
Right.
But on a risk perspective, it's low to medium.
Yeah.
Yes.
Right. Okay. So tenor is how long?
Yes.
How long I'll keep my money in, which is maybe 6 months. So that's short. Yes. But then the risk I'm taking is mid to high. Okay. So let's maybe, when you say access interest at any time, I think they were worried about that any time. And I think John also hinted on it. Does that mean they can come tomorrow and ask for their money?
So thank you, Flavia. So in terms of access to interest, you'll have to give us instructions when you want to access that interest. But as we've seen, most people prefer to accumulate the interest over days for 30 days, and then they come at the end of that period. Then some others opt for 90 days because you want to have something which has accumulated and a bit giving you a lump sum. So that's what happens in terms of access to interest. So you're the one who is guiding us, and then we build that in our investment program. So that is the tailored investment.
And this is a conversation you're having at the beginning.
Yeah, Vernon talked about the profiling. So when you're doing the profiling and assessing your needs and goals, we're also looking at your access to money, because part of those needs are, I would like to have liquidity to take care of different obligations. So we build that into the program at that point in time.
Okay. Should we care about what you actually do, the behind the scenes? Should we care about where you're putting the money to grow the money? Or is that a conversation we should be blind to? I've actually never asked that. With Britam, I've been with them for so long, and I never really ask where they put my money.
Yes, of course. Because again, when we're profiling you, the investments that we make should also be in line with some of the things that you agree with. So we do have particular investors who don't like particular assets, and we make that very transparent with you as well. So we do have a plethora of asset classes that we invest in. The typical ones would be, we do invest in bank fixed deposits to manage our liquidity. But the more exciting investments, the ones that actually give you this high return, would include Eurobonds, which are bonds that are just denominated outside of the country, and structured products. We do invest offshore in some of those things you might have mentioned, not particularly in Bitcoin, but in foreign indices as well. So this is also made very clear during our annual general meetings. So we are obligated as well, once a year, to give you a breakdown of this fund.
Where the money went,
what you earned, and how we got to that point.
Right.
So normally we give you a more detailed breakdown there, but also in our fact sheets. We give you fact sheets on a monthly basis. This is for all of our products in our product line that will highlight exactly where the investments are at that particular point in time. So this is information you should have. Yeah.
Open that email, read it. Yes. I'm guilty. You see a fact sheet, but you're like, it's okay, I trust you, but read it. The insured question, I think Dennis said, was going to you guys. Yes.
So in terms of whether the investments are insured, no. But we are saying that we're investing in low risk opportunities. We are looking at offering you stability. So that can only happen if we are mindful of, in terms of how the research is done, how we are creating and calibrating the investments to ensure that indeed the risk is low. And with the low risk, then you also have low likelihoods of losses. So that's how we are doing it. But then the other thing that we do, when you look at the governance program of the dollar-denominated unit trust fund, we have a bank, a Standard Bank, who are our custodians, and as custodians, they hold the money, they do the safekeeping for the titles to the investments that we are making, and then we also have a trustee. A trustee for the fund is KCB. What KCB does is then to supervise that the fund manager is doing their role, and then also supervising the custodian that they're doing their role. So what that does, together with the CMA authority, is that the investors are protected. So that when we say we are investing in low-risk opportunities, that's what we are doing. When we say we are giving you stability in terms of capital preservation, that's what we are doing for you. Okay. So that risk management is addressed in terms of how the investments are made and how the governance in terms of the other gatekeepers are then supervising the investments in the dollar unit trust funds.
Someone, I'm not quite sure, I think they really wanted to ask, but someone asked about the question of how the dollar investments compare with the stock exchange market, and they were deliberate on how that question was for Dennis. But I'll give Alex a chance to answer the question we talked about. What should I be tracking? Now I've invested with Britam, I've put my dollars away, and now I'm on a waiting game and it's growing. What am I supposed? Because I can't just sit back. But also someone said, for you, Alex, how would you compare this with unit trusts and or bonds? I feel like that's also something that you two could have answered. But Alex, give your opinion, and we'll come back to Vernon and Ronald.
Thank you so much, Flavia, for that. Let's take a step back. I'm going to actually start with the question of unit trust or bonds. And I know we have quite a number of listeners who are from the diaspora, whether it's Europe, whether it's US, Canada, Japan, of which right now more people are becoming more aware of treasury bonds or mutual funds in those countries. In the US, the 1 year treasury bill, they are called the 1 year treasury bills, they're offering around between the 2.5 to 3% return on a good year. Like the last 2 years, we have seen they have almost reached around 3%. But under normal years, they are offering around 1.5, 2%. Now, if you want to compare that with this dollar-denominated fund, which is averaging around 5.6, that means it's already winning. Two, when you have to think of people in Europe, now that's even worse. When you have to go to, for example, Britain, where they have guilds, 1 year guilds or even 2 year guilds, they offer rates of around 2%, 3%. Those, my friends who are in Sweden, who have wanted to invest in dollars in Sweden bonds and mutual funds, they barely get 1.5. Because the risk there is extremely too low. So, but you're going to get just 1.5. Yet, if you bring money back home in your dollar value and you invest in the dollar value, it's going to get around 5.66%. So the return on this compared to that is much better. But even if you are to compare it to the standard, because even this one is a unit trust, but I believe if you are to compare it to a unit trust of the UGX, I think that's the question, then you're going to, if you are to look at the return where you say, the UGX Britam is offering on their lock-in of 12%, but here they're offering a 6%, where should I put my money in the UGX? Not necessarily true, and that goes back to the question which you talked about, Pravia, what to track. There is the component of FX. If we are to take a step back, and I've done numbers which I can't present right now, but I'm going to break them as best as I can for one scenario. If someone took, let's assume, and now this is an assumption, that Britam had opened this in 2019 or 2020, which is 5 years ago, and averaged their 5.6% return. And someone had $10,000 and invested it, and let's say they got their $10,000 and invested it in a dollar account, versus someone who had $10,000 in 2020 and put it, exchanged it to UGX and put it in a UGX account. Where we are right now, who would be better off? The person who is in the dollars, if they have to get 5%, they average 5% for the last 5 years, and they exchange it right now, they would be better off than the person who invested in the UGX. Why? Because of the FX. In the 2019, early 2020, the FX, the UGX to the dollar was around 3.20. So if they had invested in that means they bought the dollar at the cheap, and they have invested in the UGX in the dollar account, they are getting a very good return. And by the time where they are right now in 2024, going to 2025, where the USD has reached 3.750, that 250 per dollar is also a return to you. That was the same thing to the people who are doing in Kenya, and that goes also back to the question: what do you need to track? You need to track the economic trends. You need to track what's happening in the economy globally. We need to track and see what if there's so much news that can happen globally that automatically end up impacting your investment in this account. A person who and I know they have talked about the products they are investing in. They say they invest in Euro bonds. One of the things, the recent Euro bond we have seen is in Nigeria. They have recently issued the oversubscribed. It's a dollar bond offering over 8.5% yield. Now, when Britam goes and invests in the dollar bond on your behalf, you want to know what's happening that side. And you know that if they have exposure in Kenya, what is the Kenyan economy doing? How is their dollar return? It's almost 8%. That's why they can manage to give you 6%. What about Nigeria? 9%. They can help you give you that. 2, they can invest in all the different dollar bonds. There are quite a lot on the African continent. Especially, the biggest advantage of that is to be in a position to access those markets that you can't easily access, that you cannot go and invest in Egypt in their dollar bonds. But now Britam has a footing there. They said they go buy those dollar bonds that give a good return. And when you track those economic performances of the different products and also track the FX changes over time, you end up realizing that your investments are not just the standard economical investments in terms of like we are buying the UGX treasury bonds, but they are buying so many other bonds that in the end, you are more diversified. The product is more diversified, and that automatically makes you make a little bit more money as compared to someone who might just put their money in just one basket. But also maybe, Flavia, to talk about the other perspective, which they talked in the lock-in. We always tell people that investments are more behavioral than numbers. Yes, the numbers sometimes is what someone will see and want to make the decision on, but it's more behavioral. The best investments are those where you can be willing to play the long-term game. You must be willing to stick in for a long term. When you're putting in $10,000 and you for 1 year, it's going to make you maybe a $600 return. But you forget, if I leave it in 2 years, 3 years, even this $500 or $600 I'm making every year is going to start making in money. It's going to start compounding. So it becomes very, very important that when you are profiling and setting up your objectives that you must invest for, and go to Britam and profile yourself, you have also to be candid enough to say, I'm going to be putting in $100 every single month. I needed to see it through. What Johnny talked about, the education plans of the middle income class, where they say we had to take our kids for the future. I want to take them to study in Europe, in the US, and I'm going to pay the dollars. So you must be in position to sit back and Flavia and say, I have 3 kids. I know for a certain chances they must do their university in Canada. You'll have to spend dollars. Then you go to Britam and open up that dollar account and putting that money every single now and then, and have the discipline not to take it out for as long as possible to allow it to compound and make that return as sweet as possible. That behavioral part, which is the lock-in, and I'm happy for it because it kind of helps you to track and say, in the first year, I made $600. In the second year, I made $700. In the third year, I make $800. And the more money you make, the more it's going to even encourage you to even invest in more money, but also it's going to encourage you to kind of be invested to say, my goals should be long term and I can be willing to stick into it for the long term and make that money. It's the same for the diaspora people who will have to say, I'm in Europe, I'm in Sweden, I'm in Norway. What can I invest in? Maybe in Europe you can buy the stocks or the bonds in Europe, but they're offering 2%. If you bring your money back home, you want to keep it in a stronger currency because that's the currency you earn in. But that means the dollar fund becomes the better option. And already the fact that it's giving a 6%, 5%, 6% return annually without tax, that makes it easier. That even if tomorrow you want to repatriate back your money, you earned in dollars, bring it in Uganda, and take it back as a dollar. And that means you have not incurred any FX losses. At the same time, you have been earning something much better than what you are going to earn in Denmark, in Britain, in Germany. So that becomes your tracking position to say, what are my goals? What are my numbers? Where are they invested in? How are those products performing? And always, when you start getting those things down on the ground, and you talk to Britam and their investment advisors, they are very responsive. They will tell you which products, and then you kind of help you to access those investments and also play it in the long term, make it the best return out of possible. Back to you, Flavia.
And I'm seeing that we're pressed for time. I'm not quite sure. I want to get a directive if we're good to continue from my guy. Okay. So we're going to try and wrap it up this way, just to not limit what any of my speakers have to say. I'll come back to each of them for a comment or thought on what you should know about this conversation today. That way they can sum up even what I might have missed to ask because of the time frame. So I will start with the ones I have here, and then I'll end up with you, Alex and John. But the couple of questions that came in sort of are similar to Vernon and Ronald. There was that question of one said, my objective is to save 8 years. Is it possible to bring in my cash semi-annually for the 8 years? But there's also someone who wanted a breakdown of, let's say I start with $10,000, what that looks like. And I know Ronald will have that breakdown for us, because people want to make it make sense, because, you know, what that looks like. And I know we've been given an extensive of about 30 minutes, 20 minutes, so we'll use that. So there's also the person who is, because, you know, sometimes risk, they said about risk appetite. I think John is going to mention that. What's risk appetite? You know, you're abroad, you've made money, you've bought your piece of land, you've left it here in Uganda, and you've gone to work, and then you make 30 million shillings and want to the foundation, and then maybe 6 years later, you've come back to Uganda with a house that's not yet fully finished. Now the house, to use an asset, but you can't really liquidate it quickly because now you're not earning. You don't have money to eat. The one was saying, you know, you don't have money to survive, but you had money. If you were wise about the investment, now you'd be coming back to probably build a house and then have some liquidity or make whatever investment it is. So for me, more than anything, this conversation, I believe, is good for people who haven't yet figured it all out. You know, you're making money right now, but that's not a guarantee for the next 10 years. And you haven't yet figured out how to keep this money safe. I feel like this is a very safe option. So let's come to you, Ronald, for that breakdown of if somebody says they have $10,000, what that looks like. But I know we start from 5,000. Yes, we start from 5,000. But this person asked for $10,000, and then the person of, I want 8 years. And someone also asked, how can I invest for longer than the 3, 6 months, and 12 months? Because you're limited, that's also possible. So let's go through it.
Thank you, Flavia. So in terms of investment minimum requirements, anyone with $5,000 can take advantage of the product. And then after that, you can always top up with $2,000. Yeah. So in terms of our theme and what we're trying to do, our theme is that would like the Ugandans here and out there to let your money work for you. So that's the message. And so specifically for the ones abroad, we would like you to invest at home. Of course, our friend Kakanda has clearly illustrated where the rates are under 3%. And of course, if you're coming back home, you're in a much better position. But then also wanted to mention that when it comes to dollar investments, you're earning at 2 levels. I think that's important to note, and it has come out clearly. You're earning on your actual investment, but also you're earning from the movement in the currency. And we've said that for the longest time, if you look at our currency for the last 20 years, some of the Uganda shilling has been losing against the dollars. And when you look at data for 20 years, that's in excess of 100%. If you take the period where we had the sharpest depreciation of the Uganda shilling, which was between 2014 and 2004, that is 10 years, we had a loss of 51%, meaning somebody at the start of 2004, if you had bought your dollars and then you change them at the end of 2014, you had a gain of 51% just coming from the change, the currency conversion. But at the same time, you're also taking advantage of a very good investment, assuming it's giving you a good return, like our product is giving you a 5.6%. So if somebody gave us $10,000 today, and you're earning the average rate, which we are telling you, 5.6%, that would be about $560 in a year. If you break it down per month, for some that could choose to use the $10,000 to take care of some obligations, it means that every month you have access to $50 that can come to your pocket to address different needs. And then at the end of the year, you're looking at the $560, but also if you're converting and moving out of the dollars, you're looking at the possible movement in the currency being another source of gain for you. So that is what I wanted to
for those who wanted to keep their money longer. I know you had said yes, it's 3 months, 6 months, and 12 months, but someone's saying I really don't want to take my dollars out after 12 months. What then? What are we talking about at that point?
So we do have quite a number of investors who have a similar mindset. So how do you deal with investors that want to invest beyond the
12 months
offer? And the tenors that we offer are very specific, 3, 6, and 12 months, and there's a reason why we offered the shorter term. So we've been seeing the market changing. We've seen how the market has changed significantly over the last 5 years. The government does come out and give you treasury bonds of 20 years, and sometimes you ask questions, how are they able to do that? But there's more stability in a government than there is in the particular markets that we invest in. So the year is not only on our side, but it's also to protect you as an investor. Because think about if you were to lock into the unit trust at 5% right now, and then 4 years from now, that rate is now at around 8%.
Yeah.
Right? So this all came from our market research when we were trying to profile it and also give the features to the product. So what came out clearly was that, yes, people do want to invest long term, but they want to be able to make short to mid-term decisions. So you can invest for longer than a year. We just give you the option to reevaluate that decision every year.
So for this one who asked, I would like to save for 8 years. Is it possible to bring in my cash semi-annually for 8 years? Even at their first 12 months, you're still saying, I'm not saying take away the money.
No.
I'm just saying we sit down.
Yes.
And then if you still want to continue, you continue. But I'm giving you the option if you do not want to continue.
Correct.
That's what you're saying.
Also because your profile might have changed.
Yes.
So that's something that we are trying to focus on, making sure that we are accurately profiling our investors.
Yeah.
It would be great for us to lock you in for 20 years. We'd know that money is there for 20 years. But we want you to be able to take advantage and take control of your financial future. So your problems now are not the problems you have in a year.
True.
And your needs now might not be the needs that you have in a year. So investing for a year means you're going to commit to that year to leave that money in. But after that period, you might want to bring more. You might want to take out some. We just want you to have that opportunity to do that. Yeah. And it not be a back and forth of where you have to
invest my 10K and at 12 months I take out 2.
Yes.
And I leave the 8 and continue with the 8. So you're saying it's actually, you're right. It's good for us. It gives us the options. But for that person who was asking about the 8 years, I guess you can still come back after the 12 months and Vernon and Ronald still agree to keep your $10,000 and whatever else you want to add on and keep growing it for maybe another 1 year and keep having a conversation every 1 year. Also, I think it's more advisable to have that consistent conversation around your money. Don't look for 20 years and only come back to look for Vernon in 20 years. He said the fund manager and the fund are completely separate. So it's easy. It's better to always have those consistent conversations. So yes, you'd like to lock in your money for long, but isn't it nice that every year you refresh and have that conversation, what is happening, what's going on? So I'm going to give each one. I think Dennis, you can speak into someone.
Thank you. The comparison between the equities market, call it, and the funds under unit trusts. I'll use a case study based on the data we are receiving from the market. When you look, we have majorly two funds in the market. We have money markets and we have the equities funds. Now, the equities funds invest in equities. So if you want to look at the performance of equities in Uganda, you look at the performance of the equities funds. Now, when you compare, based on the data that we have, the equities funds vis-a-vis the money market funds, in the shorter term, you realize that the money market funds are performing better than the equities funds. But we expect that, and history has shown that in the longer term, the position or the performance is changed. Where you find that the equities funds are performing better than the money market funds. Yeah.
And that's why his conversation is short term, so that we can keep changing.
Yes.
All right. So maybe your 2 cents as we look at.
Maybe to emphasize the fact that the risk profiling and also monitoring of the investment is done by the manager, and that's why the manager is paid. So the investors out there,
Ronald gave you a look.
the investors out there and most of the retail investors, they shouldn't worry about risk profiling.
Right.
All you need to do is make the decision to invest, and then you come to the manager. The manager will will have the conversation with you. They will risk profile you, and they will choose the best asset classes for you to invest your money, and the monitoring thereafter. But also to encourage the investors to always attend AGMs, annual general meetings, because that's where a report on the operations of the fund is given, and you can touch base with the manager. Maybe lastly, to talk about, I expected a question around why have dollar funds become
popular?
Yeah, popular of recent. Last year, that's when we started licensing dollar funds. This came on the back of us receiving quite a number of complaints from investors in Uganda who had taken the initiative to, out of their own search for investment opportunities, to invest in offshore funds. Now, CMA does not regulate offshore funds, but investors used to go and invest in these funds, and whenever they got their hands burnt, they used to run to CMA. So CMA, out of those market incidents, it took the initiative to come up with locally regulated or licensed funds so that Ugandans are not duped going forward. Yeah.
That makes a lot of sense to me. I know somebody asked about cross-border arbitrage of interest rates. They've invested X amount of money. To you speak on product, and then we can hear John and Alex's winding up sense. Brennan.
Yes, so as had been mentioned earlier, there are two ways in which you can earn from this product. So the first is through your interest income, which is what we would be offering you as Britam, but also there's an opportunity for arbitrage where you could have bought cheap and now the market is a place where you can sell high. So is there any risk? That would now be obviously on the side of the investor, depending on how you acquired those dollars. That's why when I mentioned at the beginning that our most looked at potential investors are USD income earners. So you're already in the space, you already have the dollars, now you're trying to figure out what to do. When you have obligations or you're now just trying to diversify, you expose yourself to that risk. So being able to access money through arbitrage positively would be at your advantage, and then you'd get added advantage from the yields that you'd be able to get here. So what you'd be really looking at, and Alex had mentioned this earlier, is there is a need for you to look at what is happening in terms of your risk profile, and particularly here in terms of the economies, not only in Uganda, but also in America, where the dollar is domiciled, but in other parts of the world. So as you're monitoring what is happening within those regions, what is affecting this either depreciation or appreciation, maybe just to break it down, in Uganda, we're normally asked, we normally give projections of where we think the dollar is going to be. And this is normally informed by what we're seeing on the ground, what the government is telling us and what the national reports normally present. So as a dollar investor, especially if you're looking at the Uganda UGX, your main thing is the depreciation. And depreciation is really run by a combination of factors, but the main things in Uganda that drive depreciation is the fact that, one, we're a net importer. So we import a lot of items into Uganda, and most of these come in foreign denominated, so there's a demand. The second thing is that we spend a lot more money as a country than we collect in revenue. So it all comes down to supply and demand. That's what affects depreciation and where currencies come out at. So if we need more dollars within the economy, our shillings will depreciate. They will lose value. And the only way to solve that is by turning that situation around. If we start to export more, which is what the president is trying to do right now, import and export substitution, if we start to raise more revenue, which is from production, there will be less of a need. So that would be an advantage to us as an economy. But on the other side, a dollar investor, as Ronald had mentioned, if you look at the trend of how it has been, the last 20 years, we've lost almost 100%. In the last 10 years, it's close to 40%. So as a dollar investor, for the last 20 years, you've just been more or less doubling your investments because you've been earning both ways. So that's something that we want to now give the locals in Uganda who would like to diversify into dollars an opportunity to be a part of, because you shouldn't lose both sides. You know, when we're talking about investments, when one person is losing, the other person is gaining. But why can't you gain on both sides? So we've spoken to the demographics that we're trying to attract. The diaspora is really one that we are trying to focus on, coming to invest at home, really because point blank and simple, you'd be earning a lot more here. The averages for this same amount of investment of a year are below 2%. If you look at 10 years, the last 5 years, it's below 3. As Alex had mentioned, currently it's at about 4%. So, and those rates will come down. So the goal here really is to continue to add value, not only also to Ugandans, because this is also offered, a product that is offered to individuals that are in Uganda that meet our criteria in terms of sign up. You're able to enjoy this. We are trying to attract investors to Uganda because at the end of the day, more investment and more eyes in Uganda will essentially benefit the country.
Our bottom line, that makes sense. Yeah. I know I had promised that we'd do that and do the launch, but I think the weather might hold off. If I can just let Alex and John give their final remarks and thoughts on this, then we'll cut back to you. John, I know you've been silent the most. Let's come to you, then we'll wind up with Alex.
Thank you, Flavia. I think we've preached enough about making dollar investments. I think the decision now has to lie with the individual investor.
Yeah.
But just to emphasize that if you're a low risk kind of investor, I think this would be a good option for you.
Mm.
If you operate in a sector that's bedeviled by currency volatility, if you're into international trade or you import things or things like that, I think this would be a very good way. Can also be a great way to diversify your income and to also mobilize additional capital to support your business. Now, on the issue of currency fluctuation, I think I would also couple it with being vigilant. You know, Ugandans now, we are really too stuck on social media. Social media is good, but you really need to take time. You need to be an informed investor. It means you need to read, you need to read The Economist, maybe the Financial Times. You need to see what's happening out there, the Wall Street Journal, for instance, because you cannot be a misinformed investor, because some of those things, the lawyers say that ignorance is no defense. So some of those things that might happen there might affect your investment positively or negatively. And then finally, there's the issue of, which I need to emphasize here, the exit options. Because Ugandans, the challenge we have is that sometimes it's easy to invest, but how easy is it for you to exit? You can enter and say, I'm buying land, but are you sure when you're exiting, you're going to get the value that you invested? Sometimes no. So if you have an option where it's easier for you to exit, you can access your money at short notice. It's a kind of a semi-liquid investment, then I think it should be the way to go. So with that, I want to encourage all the investors to strongly consider investing in that dollar-denominated fund at Britain. Thank you very much.
Thank you. Alex?
Thank you so much for that. My winding remarks are going to be a little bit different. We always, from the investors who have always, we talk to almost every now and then, people who are starting to get interested in the capital markets. There is always that question where they say, oh, how do I invest in the Kenyan economy, Kenyan treasury bonds or euro bonds? How do I invest in the South African euro bonds, Malawian bonds, or Nigerian euro bonds? And so for me, this is the starting exposure an opportunity that we have always looked for, like Dennis talked about. People who have always wanted to go to the offshore funds, but they are not regulated. Now, all of a sudden, we are starting to have products that I just need to walk to Britam in Nakasero, and all of a sudden I can now have an exposure to the Kenyan economy. That exposure and the diversity, we always encourage in investments to diversify in products, diversify in equities, diversify. Now, even diversification in economies. The fact that Ronald and Venom have talked about that most of their investments are in either fixed deposits or euro bonds, it means the fact that they are investing in a Kenyan euro bond or Nigerian euro bond or whichever euro bonds they are, at least they are not Uganda, they are regional, they are not in Uganda, it gives you that exposure to invest in that. So for all those who have always wanted to invest in the Kenyan economy, the Kenyan bonds, and take advantage of good rates from there, but because of the entry limitations, now this becomes a very good product for you. But most importantly, I know for the business people, Venom has talked about those where you know you're about to import, you know almost every now and then you're going to be importing. It makes sense for you to start investing in a currency that you always use to buy. But the diaspora people, the people who are part of, some of us who are in these hard currencies, the biggest question has always been if you live in the US, you know the political stability, the economic stability, and you always ask yourself, but if I'm sending money back home, how do I best protect myself? Now, these are the opportunities you start to get. You say that I no longer need to be fully exposed to the UGX. If you are in the diaspora and you are investing in land in Kampala or around Kampala, that's an investment exposure to UGX. If you're in the diaspora and you go back home and buy a unit trust, a UGX unit trust, very good investment, that is a UGX exposure. If you are in the diaspora and you buy a treasury bond, that's a UGX exposure. But remember, you earn in dollars. So the advantage of you exposing yourself to other hard currencies, the currencies that you actually understand, is even much better. For a person in the US, you know, you can easily say, oh, I bought a mortgage and I paid this amount of money. And you can easily compare it with the performance of a dollar account, a dollar investment by Britam, and say, if I'm getting a 5% per annum, but my dollar mortgage is growing by 3.5%, then you can easily say, I can see the performance, I can see the growth that I'm getting from this particular product. So it becomes a good position, and we are encouraging it, and we are happy that Britam is launching its product today, and we're encouraging more and more people to take advantage of this, that at the end of the day, do not have your basket of investments in one particular product or one particular exposure. This allows you that no matter what risks come in, we keep talking about the risk of, we have talked extensively about the risk of UGX fluctuation. It's a matter of time, it will come. Whether it's coming tomorrow or it will come in 5 years, it will come. But that person who would have invested in the dollar account would be protected. We have talked about the different other risks, but this diversification in a dollar investment, medium term, long term, it kind of hedges you and protects you at the same time when you are making a very, very, very good return. Thank you so much, and I encourage everyone to invest in this product.
Thank you so much, Alex. The best time to plant a tree was, 20 years ago? And the best time to invest is now. So after this conversation, I'm sure you'll be able to find any of the team. They said plan B, and get the facts and then know what to invest in. Ronald, I'm going to give you the floor so you can actually wrap us up on what the product is and how we can take advantage as we, of course, conclude.
So our mission as Britam is provide you with financial security every step of the way. And as part of that is innovation, and we continue to innovate. We've done this before. For the last 5 years, prior to this year, we had the first dollar retail a fund, which we sold for some time in Uganda. It did very well, and we allowed a number of investors to actually make their investments in dollars. But now we are taking it a step further, and we'd like to thank the CMA for appreciating that innovation by Britain. And last year we got the most innovative award in the capital markets industry from the CMA, and it's a testament to some of the work that we've been doing around innovation. And so this time round, with the dollar denominated unit trust fund, we would like you to take advantage of that. And the key thing that we're mentioning is the 5.6% return. We've tested it. We've been running it from January to now, and we know it's working. And then we're also looking at our track record when we had the first dollar retail fund to know that this is a product which is good for you. If you're looking at stability, looking at a good return, and you're having access to liquidity, all these things we've talked about, we would like you to take advantage of that. So in terms of how you can access and get more information, we have a number of financial advisors. You can reach out to them, but also you can reach out to us directly through our phone or email to be able to provide more information. At the start of this year, we launched the My Britam app. So when you go to Apple Store, you're able to download My Britam app, and that should enable you to start the investment journey with us. And then for those of you in the diaspora, at your fingertips, you'll be able to view your investments with Britam, but also send us instructions at a click of a button. So having said that, we are very excited about the Easy Earner Dollar Fund, and I would like to encourage you to take advantage of its benefits and how it can enhance your investment journey.
Right. Thank you so much, Ronald, Vernon, Dennis, Alex. Thank you. You've all been great in this conversation. I know we have something for you to watch. If I can just have that queued just now before we say our goodbyes.
Meet Moses. He invests in dollars, but here's the smart part. His dollars don't just sit there. They're out there making more dollars for him. He can take a break, but make or break, his dollars never rest. They're out there hustling for him 24/7, even when he's asleep, halfway through his dreams. Save your dollars with Britam Easy Earner Dollar and earn competitive interest in 3, 6, and 12 months. Call us today on 0312 305 600 or email clientservicesug@britam.com and let more dollars start rolling in.
Just one of the things as we wrap up, I need to tell you is that the biggest reason I've loved to be with Britam as my investors, the transparency is there. You get, those questions that you have that you think are irrelevant, they'll still take them and answer them. So I think this will be a great opportune time to say that we've officially launched the Britam Easy Earner, and you can make those money moves, invest in dollars, and let your dollars make more money and more dollars for you. If this is just the beginning, there'll be more conversations to educate you on what this is, why this makes sense, and any other great products. And he said the phone lines are available, but we're going to leave you with a lot of information on all platforms that you're on. Britam is there, and there'll always be someone ready to answer any question. So this is not the end of the conversation. This is just the start of the conversation. So it's officially launched. Thank you so much for making the to be with us. It's been amazing. You've even been patient all the way for another extra 30 minutes. So well done, kudos, and let's start investing. Let's make those money moves. As he said, Britam is with you every step of the way. Thank you, guys. Yes.